All right, so in this video, I want to go over basically my full trading model. It's a very simple trading model. Um, Obviously, I use ICT concepts. If you guys don't understand ICT concepts, I would recommend that you guys go watch TJR's bootcamp. He'll explain everything, better than pretty much anyone can. So, all right, all right. In this video, I just kind of want to go over. I want to go over like my entire trading model. It's a very simple model. Has around a 60% win rate with an average risk reward of 1.8. People are going to try to tell you they have 90% win rates. That's not really realistic. This is very realistic. It's obviously based off of ICT models. And, if you don't understand ICT, I would recommend you guys go watch TGR's bootcamp. He's going to explain it the best, probably better than pretty much anyone can. So yeah, just go watch that before you try to watch this video. This video is pretty much putting all of them together. And for me, I need very clear instructions because I tend to overcomplicate things a lot. I tend to, not really understand things too well. So this model has very clear instructions. It's very simple. So yeah, if you guys are, someone like, you need like very clear instructions, I recommend this model to you. It's very easy. So anyways, yeah, I kind of just want to go show you guys pretty much what it is. Oh wait, I forgot to, 1 second. Sorry, guys. Dude, what is going on? All right, I think that's good. All right, so I already wrote it out. Because I tried to film this video before and I fucked it up. So this is the second time I'm filming this. But anyways, yeah, this is the entire model. I'll go over everything. So the first thing I need to see is a high time frame liquidity sweep. This could be on the 1 hour, 4 hour, or the daily. So, a lot of times what will happen is we can sweep on a 1 hour high, right? But it won't be a previous session high or low. Therefore, it's probably not going to be an external high. It's probably more internal. Like, for example, like this could be considered a high, right? This bullish candle is technically a 1 hour high, but it's not an external high. It's not a previous session high. It's not a 4 hour. It's very internal. Therefore, if I was going to take it off of something like this, I need other confluences to align with it. So that's why I wrote here, I need a high time from liquidity sweep, 1 hour, 4 hour daily, preferably a previous session high or low, like London, Asia, New York, if you guys understand that. So if it's not, and let's just say it's a normal 1 hour liquidity sweep, I'm going to need two other confluences, or at least one of these, to be aligned with it, like fair value gap or equilibrium of the external range. But if we sweep like a daily high or 4 hour high, that's an external high. So I do not really need these other confluences, but it's always good to have. So, once you get that, you can have an SMT, right? It's optional, but it's a great confluence. And then, everything that doesn't say optional is needed. So the next thing you need after, let's say we sweep an external high, you're going to look for a 5-minute displacement candle. This basically is just a candle. Let's say we sweep a high, right? It's just a candle just closing beneath the liquidity sweep. So it's just closing beneath that high. That's kind of showing you, let's say, if it inverses a 5-minute imbalance, disrespecting a bullish PD, right? That's showing you that price is probably going to be bearish. It shows that it's also, that it's respecting the liquidity sweep. So, you need that 5-minute displacement, and then you need that 5-minute retracement. The 5-minute retrace is literally just a 5-minute candle closing back, bullish. And then once you can get a 5-minute retracement, right, it could be more than two. It could be more than one candle. It could be like 3, it doesn't matter. You should need one 5-minute candle close to the upside, and then you're going to scale into the 1 minute, and you're going to look for a market structure shift, right? This could be on the 5-minute as well. The 5-minute would probably be better, but most of the time it's going to be on the 1 minute. You're going to get that 1 minute market structure shift, and then you just need a fair value gap with the candle close out. And again, PO3 is optional, another optional confluence. Okay, that's it. If you understand what the 2022 ICT model is, this is pretty similar. But so yeah, I'm just going to go show you guys what it looks like live. Okay, so here we have a daily high, right? On the daily, you can see it's a daily high. So to me, that's a very external high. For ES, so ES never took that. So that means that we have a big bearish SMT. This is a great confluence because it's on the daily time frame. So a daily SMT, that's huge. That's a great confluence. All right, from there, what I'm going to do is I'm going to scale out to the 5-minute. And since we have this SMT and I see ES is more bearish, what I'm going to do is I'm simply going to try to take the trade on ES. Right, if NQ is giving better bearish momentum, I'll try to take it on NQ. But again, it doesn't matter. Whichever one is giving better bearish structure. So here, we swept it right here. We got a 5-minute candle close beneath the liquidity sweep, and then we got that 5-minute retracement, followed by more 5-minute displacement. So I'm already on the 1 minute from there, right? This is market open right here, but I'm already on the 1 minute, and I'm looking for an entry. So I'm going to try to take this on ES. I prefer the index that is closer to the drawn liquidity when we have an S&T. That's just what I prefer. And what else do you notice here, guys? Right, we have a perfect PO3 setup. Accumulation, manipulation, reaccumulation, manipulation, sweeping out an external high. What do we want to have now? Distribution. This is perfect accumulation, and this is perfect manipulation. So very confident where price wants to go. All I'm going to do is look for my market structure shift, which I think we already got. Yep, right here. Boom. So that right there, that's your market structure shift. Okay. And that might even be a 5-minute. Yep, it's a 5-minute market structure shift. Great confluence, okay? So here, there's only one imbalance that I see that we could possibly fill and displace out of, right? This is the only one that I see here for NQ. It's also that I kind of prefer ES. I do believe ES is probably going to be more bearish than NQ, right? Because of that SMT is closer to the drawn liquidity. So if we can come and displace out of this imbalance, so I'm going to wait for one more candle there. Okay, that's the confirmation I look for. This candle displacing out of this 1 minute imbalance after having a 5-minute market structure shift to the downside. We already have the 5-minute retrace and everything. We already have literally every single confluence that you would need for my model, right? And then we wait for a clear displacement candle. And this candle is also, this is another breakup structure to the downside on the 1 minute right here. So it's another good confluence. Okay, so stop loss going to be above the candle wick that created the imbalance right here. And then take profit. I only put my take profit at internal lows because, price moves from external range liquidity to internal range liquidity, from internal to external. And here, there's literally only one area for me to target, which is just, so this is the only area that I can target. It's a 15-minute low, I think. Yeah, it's a 15-minute low, not an hourly, so it's still an internal low. So I get, I would probably never catch a risk reward like this. But, low-key, I probably would. If I was trading this live, this is what I would take. So, yes, I would catch a 5 risk reward, which is pretty good. Really good, actually. So, yeah, we take that trade, risk 1%. And let me see here one sec. I'm just going to confirm everything. Right, we have a huge daily S&T because NQ swept out these daily highs. We have an SMT. ES is also sweeping a high. I think it's even a daily high as well. This daily high. We have a perfect PO3 setup. We have all the 5-minute structure. We got the 1 minute confluences, 5-minute market structure shift. Again, I'm kind of just yapping, but this is a beautiful trade here. Be absolutely A+. I want to see if price wants to displace past this low, getting another market structure shift. So, Jesus Christ. Okay. Boom. We got a big displacement candle. We got another one tapped into this big imbalance. At this point, is it a 15-minute? Yeah. So we're probably going to get some legs up because we're inside of this huge 15-minute imbalance. So we're probably going to get some sort of leg up, but I do think we're overall, yeah. Okay, perfect. That's exactly what I thought would happen. Okay. Well, we came back into this 15-minute imbalance. I would think price wants to move lower from here after tapping into the 15-minute. It's also aligned with the 5-minute. It's also aligned with the equilibrium of this range. Okay, we're getting displacement candles out of it. Let's see. Okay, created another market structure shift here. Let's see if we can close beneath this low, or we actually wait, not that low. This low, because this is the bottom of the imbalance. That would give a market structure shift, and we didn't even do it. We just completely took it out to take profit. So this is actually a crazy example of my model. Not every trade is going to be exactly like this, but this is a beautiful trade here. This 5 risk reward ratio is pretty insane, but yeah, this is just how I trade, guys. This is my model. Obviously, I'm not catching a 5 risk reward. Like I said in the beginning of the video, my average risk reward is around a 1.8, and my average win rate is around a 60% win rate. Okay, this is just a really good trade. Trades like this happen sometimes, but it's not obviously every single trade. So this is a beautiful trade, but that's my entire trading model. I hope you guys found this useful. Hopefully you guys can use this in your trading. But if you already have your own model, I suggest you stick to it. Do not try to strategy hop. Trust me, you don't want to do that. I have a free Discord. It's called Trading in the Zone. All right, if you know the book Trading in the Zone by Mark Douglas, I just named it after that, because I love that book. And yeah, I want to build a good community of just like-minded traders who aren't, who also want to improve their actual mental, like who just want to improve themselves, not just specifically trading. Obviously, we talk about trading, right? That's the main thing. But I want to also try to build a community of people who are trying to improve their mental state. So, if you guys want to try to, if you guys want to get into Discord, I don't know how to link it, bro. That's the problem. But it's just Trading in the Zone. That's, if you guys look it up on Discord, you'll probably find it. So yeah, we're gonna run that up. But I appreciate you guys for tapping into this video, and I'll see you guys in the next one.